Welcome back to the Talking Hedge. I'm Josh Kincaid, capital markets analyst and host of your Cannabis Business Podcast. Today we've got a pitch deck from a Nevada producer, maybe a processor, we'll find out. To help us run through this pitch deck is Katrina Glogowski. She is an angel investor and attorney. Katrina, thanks for being back on the podcast.
Good morning, Josh.
Good morning, good afternoon, good evening. All right, we're looking at a flagship facility in Nevada. It's going to be supposedly a top yielding facility in North America. This company has built an industry-leading team that's focused on delivering their promise to be the first national high-quality, low-cost brand fulfillment partner in cannabis. All right, here's your favorite total addressable market: gabillions, gabillions, gabillions.
Billions and billions and billions. Did you know that, Josh?
Yeah, well, I mean, with the feds, printing trillions, we got to come up with a new name. So I'm going with gabillions.
Yes. Yeah.
All right, 2019 fourth quarter revenues. I like this. We got financial performance within like the first 5 slides. That's amazing. Month over month revenue growth is 17% on average. So they have revenue. This isn't just an idea. Woo! They've got sales in March of 2020 at 3.8 million, highest month of sales to date. First quarter revenue growth 8.9 million, in line with the guidance of 8 to 10 million. With full year revenues in 2019 at 9.4, ahead of their $9 million guidance. So that's pretty good.
Excellent. Look at this, a real business giving us real numbers. Excellent. And for those of you who don't know, the company guidance was projected revenue. And what this tells a potential investor is that these folks thought about it ahead of time and said, how much money are we going to make? And they made a projection. And what they're communicating with this slide is that they were in line with their projections, which is very rare in a new company to be fairly close. And these folks exceeded it. So these are excellent signs, Josh. I have high hopes for this company.
Well, as an analyst, I can say either they lowballed their expectations, or maybe the sales team crushed it. Hopefully we'll find out, be able to decide for ourselves. So revenue performance reported versus actual looks like they're doing really, really well in 2020, but that was Q1. So we don't have any data from Q2 or Q3. There's going to be an asterisk in time immemorial moving forward. This is always going to be a blip on financial balance sheet radars, no matter what. So it looked good before, shit hit the fan.
Right.
All right. They're going to build a leading cannabis CPG fulfillment company that's a consumer product goods. They want to be the largest cultivator and producer in Nevada, industry leading analytics led by the agricultural professional top talents with a unique business model focused on cultivation and product end-to-end, fully integrated brand fulfillment at scale. I don't see any machine learning. I don't see any AI, but maybe we'll get there.
I see a semi-successful existing business looking to grow, and they're not saying our super secret Flower One brand is going to be that growth. They're going to white label other products, which is the consolidation and verticalization in the industry that we've been talking about. This is all good news so far, Josh. I'm liking it.
Yeah, very well put together. Nevada has kind of a monopoly on retail shops. So if they have an option to get that producer and processor and retailer license and be fully integrated in a spot like Nevada that has higher margins because it's a new state, but B, also because of the monopoly situation with the restricted retail shops, this could be a pretty good model, assuming they have that seed to sale leverage. But again, I guess we'll find out and see where they're going with it. Turnkey Solutions for leading brands, speed and ease of market entry, eliminating high costs of capital with assisting brands to secure the required regulatory licenses and consistent product quality. So creating value for retailers. They have a simplified single source ordering, diverse brands, just-in-time delivery, and consistent product quality.
Liking it.
Looks good. Got a little time frame here, timeline. So start of construction to the time they first planted their crop in May of 19, all the way to fourth quarter, signing California-based partners like Kiva and Cookies. And they're making their way. I just spoke to a guy in Arizona, Tyler Hurst, with the Burning Bush podcast. And these brands are definitely making their way into the Arizona medical market as well.
All good news. Showing progress. Good.
2020 brand launches. Looks like they've got some pre-rolls, so packs of 5, very nicely packaged. More flour. They got a white label offering, and then vape brands and the cookies line. So it looks like they're taking that cookies brand up there as well to Nevada.
That looks good.
So if they've got exclusivity on that, that could be huge. I mean, there's a lot of people that have Burner's brand of cookies, but whether it's the sherbet or wedding cake, ice cream cake, cookie strains are coming out of California. They're leading the top strains actually across all segments, whether it's pre-roll, flour, concentrates, vape, you name it. And it becomes popular about 6 to 8 months later in Colorado. And then we in Washington get wind of it about a year after it becomes popular in California. So I would say California is the leader in trends and cookies is the leader in brands. So if they've got that brand launch for Q2, I would be looking out for that.
Yeah, I'm liking this so far.
All right, highest quality, lowest cost cannabis fulfillment partner for cultivation, extraction, manufacturing, production, distribution, sales, and marketing with branding, market penetration strategy.
Verticalization.
All right, so we've got Nevada's total addressable market, 639 million in sales, 1.5 billion expected by 2024. I think a lot of these states are going to hit $1 billion. Colorado has, Washington has. I think some of the more mature markets, after about 5 years of regulated market, they should be hitting $1 billion in sales at least. That's conservatively.
Yeah, I agree with that statement, Josh.
All right, so they are essential businesses. They're the number 2 target market for brands, strong tourists, assuming that not everyone's on lockdown. Nevada is one of the hardest hit markets right now. There obviously no tourism, all of the casinos and hotels, everything's shut down. So their sales are absolutely horrendous. But they were 16%, it looked like, at one point in time, comparing to, in between Colorado and Oregon.
Right.
400,000 square foot facility. Looks like there's a huge indoor greenhouse, 25,000 square foot option for an indoor cultivation, 15 brand partners.
100,000 pounds of production. Wow. Okay.
So they're going to make up to 110,000 pounds annually at 44 cents per gram. So I don't know if the Canadian LPs listen to this podcast, but their break even is $1.74. So this cultivation in Nevada, in the desert, is going to beat them by $1.30 a gram. That's frightening.
But we have always been driving home the importance of knowing your cost of goods sold. 44 cents, if that's a real number, is remarkable, truly remarkable. I have not seen less than $1 cost of goods sold outside of Colombia. And that is the future. You have to control costs. So good on them. I'm fairly impressed by this deck so far, Josh. They're demonstrating a level of business acumen that we don't normally see. So this is really good.
My one concern so far, 150 strains that they want to grow. That's an incredible amount. You don't see 150 flavors of anything. I'm hoping 100 of those are R&D. I would like to go to the facility. I would like to smoke a pre-roll of some of the 150 strains that they've collected. I think that would be an amazing hybrid collection. When they get to that point, call me. Yeah,
it is a very wide selection for even 100,000 pounds. That's 150 strains is interesting.
So they're setting themselves up on this next slide as a potential buyout from an LP in Canada. We've seen a lot of Canadian LPs pull out of Latin America and sell some of their cultivation facilities in Canada. So they're really scaling back. And yet what we can see here from the crop yield on a grams per square foot basis, Flower One, the company we're speaking about, is on par with Organogram Holdings, which have a lot of machine learning and automation from pre-rolls to edibles. And so at 230 grams per square foot, that's a huge yield. That's an incredible amount of efficiency.
Now, my only question is this what they are currently doing or what they hope to do on this future build facility? Because these numbers are extraordinary.
Mhm.
And if they can, that's great. If they are, I'll write a check. That's great. But the slide is not clear.
Yeah, my first thought is prove it, and my
Yeah.
second thought is trust then verify.
Yeah.
So I'm still kind of cautious about that, but that's a phenomenal indicator if they can get to that point. That's a lot of efficiencies. They also want to be the leading cash cost per gram, so 44 cents. So looking at canopy growth, I don't know where they're getting these numbers from. Like I guess Intro Blue is their source, but $1.59 for canopy growth, all the way down to 50 cents for organogram. Now that's because they're rolling 60,000 pre-rolls a day for organogram. They've automated the whole system. Flower One anticipates being able to harvest at 44 cents, beating all of these folks. That graph right there sells itself if they can do it.
If this is their current production as opposed to projection, this is phenomenal.
They will be the world industry leader in terms of efficiencies and cost savings.
Absolutely. This is remarkable if this is actual data as opposed to projections.
So they have multiple capabilities with ethanol, LPG, and CO2 for extraction up to 50 kilograms. All right. So looking at a liter of distillate at about $4,000 raw cost. Okay. So 1 liter is 1 kilogram. So $4,000 at cost to do distillate seems really expensive to me.
Actually, this is a little high. We can, and again, we don't know the quality. We saw a little blurb about that they're a CGMP licensed facility, or at least have that capacity to do so, which could explain some of their price point. But that is a little high on the wholesale market right now to date, Josh.
Yeah, I feel like I've seen CBD oil for less than $3,000, or between $3,000 and $4,000 for a kilo. So if their cost is $4,000, and that doesn't make sense if somebody else can sell it for less than that and still make a profit. But I don't know. Maybe I'm missing something.
I've seen $400 coming out of Colombia, and so let's just assume that our math is bad given the totality of their slides and their profit margins that they referenced earlier. So maybe we're not understanding something here. But if this is the real number, $4,000 is a little high.
It's a lot. Yeah. I mean, they kind of not dismiss it, but disregard it in a sense by saying you can make $100,000 from that in order to make gummies. Yes, but if somebody can do this for half the price, then it doesn't matter because no one's going to buy it at your wholesale $8 to $10 if someone's doing it for $4 to $5 wholesale.
Right.
So something to think about. Manufacturing and production looks like they're looking at for edibles, a 50,000 square foot commercial kitchen to have diverse products and offerings for white label solutions. So they also want to do U.S. food and beverages. We'll see if they're able to do it. A lot of companies, are going out of business. A recent soda company in Washington was the last one to kick the dust here a week or two ago, trying to do some beverages, sodas and whatnot. Still don't have any coffee. I think Oregon is the only market I've seen that has grab and go coffee. Mm-hmm. K-Cups are not coffee, people. It's not. All right. They have a distribution, sales, and marketing team and brand partnerships and a leadership team.
Interesting. I like the team.
Yeah. They have a board of directors. All right. We're here.
Josh, did you see an ask?
No.
So let's get to the 7 tips.
All right. 7 tips to a successful investment deck. Number 1, did they identify the business plan goals? 2, did they know their audience? 3, did they understand the market? 4, did they identify needs and roadblocks? 5, did they know what sets the business apart? 6, did they introduce the team and products? And 7 is, did they create a summary? So in your opinion, did they identify the business plan goal?
Yes.
I would agree with that. 2, did they know their audience, their investment audience?
I think they know the investment audience and the cannabis market, which is indicated by their extensive information about the price points and the brands and the white labels. Yes, they definitely met that.
All right. Yes and yes. So they know their audience and they understand the market. Did they do a sufficient job at identifying what they needed as well as what was holding them back? Needs and roadblocks.
They did identify the needs, primarily cash to build out the facility, and they did do a pretty good job of describing the facility and the requirements for the facility. They did not identify any roadblocks here, and that might be because they're an existing company and they already have the licenses and they're just trying to expand their existing footprint. But they didn't talk about, building delays or building permits or zoning or any type of things like this. And again, there could be an explanation for that given the totality of their pitch deck, which was superb. So I'm gonna give them a half a point there because it's not this easy. They're like, give me $1 million and we're gonna make $1 million tomorrow. It's not that easy. But again, half a point.
What about number 5? Do they know what sets the business apart?
Absolutely. And they did this with that chart on their cost of goods sold compared to the big 5 and their capacity, their yields compared to the big 5. So they definitely talked about the business side of cannabis. So they're not saying we have the best strain ever, we have the best soda ever, we have the best pre-roll ever. They're like, business wise, we're going to be the cheapest, and that's good. But they didn't really talk about the Nevada market too much. Comparing yourself to a Canadian producer processor is like comparing apples to oranges. So I give them kudos for sort of looking at the big players, but what about Nevada? Who else is in Nevada? Who else is doing this in Nevada? And what are the price points in Nevada? And what are the yields in Nevada? I would have liked to seen that, even if it was just to say that they eclipse it, just on average, they only yield 25 pounds per square foot and the cost of goods sold is $7. I don't care, but I would like to know a little bit more about the actual Nevada market where they are.
I would say I'm going to give them half a point. I think they did a really good job about how well they're doing and what sets them apart from Canada, but not, like you said, not in the market that they're in. Gave us a kind of an addressable market for Nevada, but not a comparison. So maybe half a point for that.
Right.
They did introduce a lot of the 15 different SKUs they had, as well as the team at the very end. So I think they get number 6 there.
Absolutely.
The brand partnerships, at least they included in their team leadership. And so did they end up creating a summary? They did not.
That's, I think, the weakness of the deck, Josh, is there was no ask. I'm a potential investor. I'm interested. These are business tending folks where, cost of goods sold and projections and yields, these are all words that I want to hear, but you didn't ask me for any money. You didn't tell me that you need $75 million to build this state-of-the-art facility. There was very little related to what their ask and what they need to reach that. So no, I don't think they created a summary at all.
Well, 5 out of 7, it's pretty good. I would definitely use this as a template, and I would try to get some cash flow too. That's a really good thing that right off the bat. Slide number 5, they already talked about projections, what they already had. And that really kind of leads the whole momentum. Like if you're already rolling and you've got some cash flow, put that out there. Ideas and everything else, not so much right now. People aren't really investing in ideas.
Right. But I like this. An existing business, existing sales. We talked a few weeks ago about buying distressed assets. If you want to take your Katrina's Candies, my fake made up brand, Katrina's Candies into a new state, just take it to a place like this and have them white label it for you, instead of going through the cost of the $75 million state-of-the-art facility yourself. And we're going to see a lot more of this consolidation and verticalization in the industry because it's just so expensive to start from scratch. And I like this model. I like this company. Really, thumbs up to them, and almost perfect pitch deck. I think they got buried a little in some of the details, but good on them. Good job. Impressive. And I would encourage our listeners and our viewers to look at this deck as a model. It's not perfect, but investors really like the stuff that's in this pitch deck.
5 out of 7, almost perfect. Definitely use it as a template. So with that, we're going to roll this one up. I want to thank my guest, Katrina Glogowski. She's an angel investor and attorney. Thanks for being back on the podcast.
Thanks, Josh.
I'm Josh Kincaid. This is The Talking Hedge. Don't forget to like, share, and subscribe, or don't. And I'm out.